All right, ladies and gentlemen, it's time for the end of day watch list report with yours truly, Dex the Algo Capitalist. So let's get right into it. All right, so the first one here is your theta. Notice that there is a rally alert for tonight into tomorrow's trading. Looks like the bulls are trying to defend this area. Now you're right here at the vortex as well. So still a chance for the price action to get back above the Kumo cloud. So this is going to be a fierce battle over the next couple of days to see just how far and wide and deep the market can get. You do have a locked in bull market because you have a bullish trend momentum reading now. So this could get rather interesting for theta. Next, we have a ZEC or Zcash, which is still in a locked-in bear market, although it is consolidated inside of the Kumo cloud. We expect sideways to lower prices to continue. Next, we have XRP Ripple, and we still have the bearish trend momentum reading, which means that you're in a locked-in bear market, and we expect for the price action to continue to move sideways because of the bullish algo shift that you got today. Next, we have silver. As you can see, silver gets deeper into the correction and briefly dipped into the $29 handle. And that is below the $30 top of the Kumo cloud support that we spoke about. So it's going to be interesting to see just how deep the market gets. Now, you definitely don't want to see it drop below the psychological 28. You really don't want to see that. But it is a possibility because the bottom of the Kumo cloud is right below that. Okay, so I do expect the market to continue to correct here. Dow Futures still has the bearish trend momentum reading, but it also has a bullish algo shift, which is keeping the price action kind of propped up. So, but you're bumping up against the top of the Kumo cloud resistance, all right? And that's what you see happening right here. This is the top of the Kumo cloud resistance. And that is at 38,910, all right? That is the top of the Kumo cloud resistance. And it looks like that is going to be a key area. So we'll just round it off and say 39,000, right? Right below the 40,000 mark. That's a key resistance zone for now. All right. So 38,910 to 39,000 is a key resistance point. We'll see if the bullish algo shift is able to push beyond that, or is it going to fall off and then the market roll over? Next is the NASDAQ 100 futures, and this market is still in corrective mode. Has a temporary support right here for now, but we're expecting more downside to come, and we do anticipate that the market will start to deepen in the correction because you haven't hit the bottom or top of the Kumo cloud around the 17,910 level. All right, so still more downside to go there. And let's see what else we got here. The next one is gold. So gold also still has the correction going on with the bearish trend momentum reading, but you got the bullish algo shift here too, keeping the price action propped up for now and not allowing it to really fall. So as long as the bullish algo shift is active, the price action will continue to grind higher, sideways to higher. And we'll see if it can get legs underneath of it. Next is the E-mini S&P 500, which has a bearish trend momentum reading. The market is in correction mode and does have support here at the top of the Kumo cloud at 51.46. So will 51.46 hold, or is the market going to continue to accelerate to the downside? That's what we will be waiting to see. Next, we have crude oil futures. So after we had the crash alert, we see now the market is giving tremendous downside momentum. All right. And the selling is starting to accelerate. The market has blown past the $75 handle support that we were looking at. So the support here failed. Now the next leg down is coming. So what does that mean? It means the old support back here at $67.60 is now in play. That is the next downside target for the crude oil futures. Next, we have the euro. So the euro has the bullish algo shift, and it is causing the euro to power up. So we are expecting now for this market to continue to power up. It's oscillating between bull and bear market. Bear market here, the correction starts, goes into bull market falters to the point where it goes back into a bear market, and now we're back into bull market territory. So every time the euro corrects, it changes trend altogether. And so far now, as of today's close, the euro just crossed back into the beginning of the bull market. So the last time you crossed into the bear market was here, and it ended up being the bottom of the bear. Then you crossed into the bull market, right? And this is supposed to be the bottom of the bull market, but it was not. The market continued to fall with the bullish algo shift. Go figure, right? Continue to do that. Then what do we get? Finally, you get the explosion. And the market continues to explode. Then you get the top of the market. Then it corrects all the way down, gives you a dead cat bounce here. Then what do you get? You get another sell-off, finds a support, technical bounce, then a new leg down, crossing into bear market, which is supposed to be the top of the bear market, ends up not being the top of the bear market, but the bottom of the bear market. The market then, bear market rallies itself back into positive territory, and it goes back into bull market. So this euro has been all over the place, and I guess it's going to be wash, rinse, repeat. So instead of this being the bottom of the new bull market, it looks like it's probably going to be the top, and the market will probably come up here for a little bit and fail at around 110 and start headed back down again. It'll get deep to the point where now it's a bear market, and we'll take out this key support here and this key support here. That's just the way it's looking right now, because you're in a much longer period term of consolidation. Look at this. The price action is the same today as it was in August of 2023. The market has gone nowhere. Next, we have the pound sterling. So the pound sterling has now topped out, as you can see. We have the crash alert. We got the initial downside production, and now we're expecting for the market to continue to head lower. 126 is the top of the Kumo cloud support. We'll see if that holds. This market has been in a much longer term consolidation as well at this price level. It's been here before. It was back here in November of last year. And then prior to that, it was at these levels in August of 2023. So since August of 2023, you haven't gone anywhere. Longer term consolidations. Then you have your Aussie. So the Aussie powered up finally, and then now it's consolidating, and you have a bearish algo shift, and it is putting pressure on the market. Then your algo shift fell off. I mean, this market's all over the place. So you still have the algo shift in effect, it's been mitigating the positive bot checks and rally alert that you have. And it's the market is just a mess because the people don't know what to do. You still got the bullish trend momentum reading, but you cannot ignore that the algo shifts keep happening. Now back here, it was it was bearish, but it kept moving sideways. It come down, make a new low, then consolidate, then technical bounce, then come back down, and then technical bounce, and then make a new low. And so you're still just in this longer term consolidation in a lot of these markets, as you can see, going all the way back to November and in some cases August of 2023. The price action has not really gone anywhere, which cannot be ignored. These are real issues that the markets are facing at this time. Once again, it cannot be ignored. All right, this is exactly what it is until it ain't. Next, we have the Russell My Hustle. Again, bearish trend momentum reading. We still have that in effect. All right, we still have bearish market, and the market's been bouncing around here at the top of the Kumo Cloud support at 2042. And we are anticipating that it is going to eventually break below that the longer this bearish trend momentum reading stays active. All right. Just like you did back here, you consolidated for a little bit and then you broke. And that's what's happening again here. So for this break should take out these prior supports. So that's what we are waiting and anticipating at this time. Next, we have Ethereum futures. So it's consolidating up here as well. You had the crash alert. You got the bearish trend momentum reading. And we are waiting and anticipating for the market to do what? Roll over. As long as these bars remain red, there is a sell-off risk alive and well in the market. Whenever you see the red bars, that's a selling market. The market's in the sell the rally mode. Whenever you see the green bars, the market's in the buy the pullback mode. And sometimes it flip-flops around like it did here. It came down, then went green, then came back 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 down, then went green. And now it's ready to try to come back down yet again. So you get these periods in these markets where the market is just shopping around, doesn't know where it wants to go, doesn't know what it wants to do, and it's just a grind. So that's where you are right now. The market is in grind mode. I know it's weird though, isn't it? But yeah, that's what we're looking at. We're looking at the grind mode of the market. And until something changes, nothing will change. Next, we have Bitcoin futures. So we have the bearish trend momentum reading, right? And then you went into a bullish algo shift. So the market now is bucking the sell, the rally mode, and is attempting to rally at this point. All right, so you went red, but you didn't go anywhere. Then you went back green. So you're still in a bull market, but as long as the bearish trend momentum reading is there, you have the propensity to head lower. But as long as the bars are green, the bias is for the market to head higher. But because you've been flip-flopping up here at this level, at these levels, it makes it, very interesting because now the market's at risk of doing what? Falling down. And that's what you're waiting for. You're waiting to see, is the market going to collapse or is it going to rally? That's what you are waiting for. Rally market or collapse market. I know it's weird when these markets consolidate the way they're doing. it makes it very difficult to get a read on it, because you don't know where things are headed according to the price action. And I get that. That's just the nature of the beast, so to speak. Not a whole lot we can do about that. The markets are what they are. And until it decides what it wants to do with itself, this is what we got to deal with. So you go in and you let the market tell you what it wants to do. And if it flip-flops around, you flip-flop with it until it breaks. Once the market breaks, then you break with it. It's just pretty much that simple. It's not really that difficult. Not at all. Next, we have the US dollar index, and you can see here that you are still red. Price action has fallen below the Kumo cloud, so the bottom of the Kumo cloud support has failed yet again, which means that you are still in the sell the rally mode in the market. Sell the rally mode is alive and well in the market. Not a whole lot you can do with it right now. All right, so just understand that going in, that the market's going to continue to do what it's doing until it stops. And if it doesn't stop, well, oh well. You got to hang in there until it changes. But when you see red bars, you're in sell the rally mode. When you see green bars, you're in buy the pullback mode. Just that simple. Not really that difficult to understand. You just have to be willing to do what you need to do, which is follow the market, be patient, let things come to you, so to speak, and then take it from there. And the market will do the rest, I promise. Okay. And that's all we got for this evening. All right. So this next segment is for our pulse waivers, and we'll get back to everyone else tomorrow. All right. So happy trading to you. Smash that like button, and I'll see you in the next one.